In this video, we're going to go through the structural levels where smart money buys and sells on Bitcoin and total crypto market cap. We're going to look through the Russell as well, and also a favorite of the community, Pepe. Please let me know for the next video what chart would you like to see drawn from the cheat sheet. We can have a look at the structural levels in the next video. I'm also going to explain a little known fact that you can't figure out where Bitcoin is going from Bitcoin's price chart. This is a bit mind-bending, but it will make a lot of sense if you reach the end of the video. And if you do so, you'll have a professional understanding of the market that other people will not have. You need every advantage you can possibly get in this market. Let's run the numbers. Rule number 85, all trading and investing is probabilistic. Probability exists where there is no certainty. 100% probability is certainty. But probability is the science of chance, and it's taught through statistics. Most of the measures that you will ever see inside financial markets are related to measuring probability. Looking into the crypto market, we were right here in yesterday's video, and we talked a little bit about the VIX, and we're going to examine what happened with the VIX in the past 24 hours as well. But what we can see with total crypto market capitalization, we had a bit of a bump up, then a rally down, a reflection, and it's all over the place. So where is total going? To answer this question, we must look from a structural perspective. Looking structurally is incredibly different from looking just at a normal regular price chart. When you look structurally, you're looking at the greatest areas of probability for smart money to come in and either support price or reject price and sell price down. The key to note, if we get negative CTKS gaps, we can get big movements really quickly to the downside and also to the upside. And well done everybody for nailing the different rules in yesterday's video. This one has a specific rule. Please let me know what that one is. Making probabilistic decisions means that we have to look at the available information. When we look at total crypto market cap, we can see that there are levels of structural overhead resistance just above price at the moment. Total crypto market cap is coming into that structural support level at 3.25 trillion. One thing is that we have a negative CTKS gap all the way down to $3.18 trillion. Now this means that price can get really volatile in these areas, not only to the downside but also to the upside. A lot of people just draw a line in, and they draw it just on a whim, basically, without any standardization or any understanding of mathematical statistics. There's a very easy methodology that you can apply through Level 1 and Level 2 standard certification. Anybody can learn it. It will allow you to draw these lines yourself. I have some great news for you. Just one sec. I'd like to tell you a little bit about Level 1 and Level 2 standard certification. When we look at Level 1, this is the primary foundation that we use to mark up charts, but all the magic happens inside Level 2. They look like just pure dotted lines, but they're not. For example, when we look at Level 1 standard certification, there are actually a lot of things that we need to do in order to be able to mark up charts just from a basic stance. However, it's inside Level 2 standard certification that everything makes sense. There is a lot to it. You may think that it's just drawing a couple of lines on a screen. Nothing could be further from the truth. It is an incredibly fine art, but it's easy to learn. And I make sure that I go through step by step with you. Please feel free to reach out to me on LinkedIn and just directly message me. You'll find those scholarships are absolutely unbelievable. You will acquire a skill that you can apply for a lifetime. Bitcoin throws incredible risk on or risk off signals across all financial markets. It's very sensitive. Unfortunately, when we look at a chart like this, we can't make much about it. We can't do a lot of analysis. We know it's in a downtrend, but we don't know why. And if you don't know why something happens, you're at the mercy of those who do know why. So you really want to know. So let's have a look at Bitcoin in terms of these structural levels. I'll just pull this white area across so it'll give you a bit of a better understanding. You can see around that 104,744 level, there was a structural overhead resistance that basically donged Bitcoin on the head. At that point, we had a structural failure which creates NSA or negative structural attraction back to this 103, 150 level. Now, it did take a while to get there, but you should understand that as soon as you have a structural failure, it directly opens up the area of structure immediately below it. Now, what if you have a structural pass? A structural pass will open the area of structure immediately above it. Now, when you have a sufficiently large gap, price can move very with great volatility. So you want to keep that in mind. The larger the gaps, the better in terms of trading opportunities. But if you're investing, you want to look for where structure accumulates. And we've definitely had an accumulation down at that 101,620 and the 101,440 mark. These dotted lines are very important to keep your eye on. The thicker ones are stronger, but when you get a lot of thinner ones all clumping together, that increases their strength. When price, for example, if we're looking right here, when price is above a structural level, that becomes a structural support level. So when price was here, structural support there. When price was there, structural resistance there. You already know where the structure is inside the market. One of the mistakes that people new to the methodology make, or new to financial markets actually, is that they think that these levels are brick walls. They can overshoot and they can undershoot. So please bear this in mind. With crypto at the moment, we're keeping our eye on the 102,400 level for structural support and the 104,800 level for structural resistance. Now, a lot of people say that they can tell where Bitcoin is going from Bitcoin's chart. Unfortunately, you cannot. For example, people would just look at Bitcoin and say, oh, I know where Bitcoin is going because of this analysis and that analysis. But when you look at the S&P 500 futures, the NASDAQ, the Russell, and the Dow futures, you can see pretty unequivocally that Bitcoin is following the directional bias inside the main markets. Now, what does this mean? Well, it means quite simply, if the S&P 500 and the NASDAQ and the Russell and the Dow drop off a cliff, Bitcoin is also going to drop off a cliff. Now, is that proven? Yeah, it is. You can see it right here. Well, what if there's a big surge in the futures? Well, what is that going to do to Bitcoin? Well, it's going to surge it as well. Ah, okay. Are you telling me, Ken, that we can't look at just Bitcoin to figure out where Bitcoin is going? Absolutely. That's exactly what I'm saying. This is called intercorrelation and interconnection. If people are just saying, just look at Bitcoin's chart and Bitcoin will tell you where it's going, they haven't gone to the stage of understanding intercorrelation, interconnection, and structure. So they're just starting out, no matter how many years they've been doing it. In yesterday's video, we were looking at the VIX. Now, why do we look at the VIX? Ken, you've told us we can't determine Bitcoin from Bitcoin. Well, you can to a degree, but you need to look at the major market indices. So what's the VIX about? The VIX is about the volatility of the S&P 500. Now, the VIX actually controls the market because the S&P 500 controls the market. If you've ever wondered what the connection between the VIX and the S&P 500 actually is, they're just inverses of each other. Now, a big call out to Steve and Mary Ellen, who wanted us to look through the Russell 2000 structurally. Let's go for it. And also TSP. I would always suggest that you put the world's most sensitive risk-on and risk-off asset class across any of your charts, and that, of course, is Bitcoin. Now, we've got the Russell 2000 here. we're going to just reveal the CTKS markup, which accounts for over 13,400 days worth of data, done in that very statistical and rigorous way. But don't let the thought of mathematics just put you off. The method taught through Level 1 and Level 2 standard certification is very, very easy to use, and I promise you don't need to get out your calculator. Having taught first and second year statistics for many, many years, people are absolutely terrified of mathematics. Mathematics is a beautiful language. Hopefully you can find it in your heart to see the beauty in numbers. It is definitely there. Okay, on to the Russell 2000, and let's have a look from a structural perspective. Now, what we're seeing here is the Russell has so many sellers coming in at the current time. They're inhabiting literally the 2100 to 2104 mark, and there's a lot of sellers here. We've also come up through a positive CTKS gap, and it did take a little while for us to reach this particular point. In fact, that took about 5.5 hours to get up to there, but in terms of the stock market, that's pretty fast. Now, don't forget, when you get sell downs, you're going to get a sell down into a structural level. And when you get a rally up, you're going to get rallies up into structural levels. Do they always tap? For example, if we look at this structure to that structure, this structure to that structure, you're seeing the architecture of the charts, but also of the markets. You have X-ray vision. Elite Service members, one of the things that you want to do if you're trading something like Doge or investing in Doge, you want to look at Bitcoin and you want to look at the major market indices, of course, as well as total crypto market cap, structurally. The best thing that you could possibly do, use the templates from the profiting course. For example, if I pop on Doge here, that yellow line, you can see that Bitcoin gravitationally pulls Doge in all directions, and the major markets pull everything in their direction. And we know where a price chart gets pulled is from structural resistance to structural support. It happens all of the time. Therefore, you must know structural resistance and structural support levels. J-Link and Colin wanted to have a look at Pepe's structural levels. We've seen Pepe go up and down and all over the place, but of course we know as the VIX was basing, Bitcoin was weakening and Pepe was coming down. We knew this ahead of time. One thing to always be really aware of, when you look at the memes, they have leverage built in. That's actually why I love Pepe. Pepe has really good liquidity. If you've got a large account, you can move in and move out of positions in Pepe without any issue. And you always want to think from that perspective. If you're inside a low liquidity token, you can get burnt to death on the spread. And when I mean burnt, I mean your profitability. So you have to be really careful. Now we can see Pepe is currently coming down. Hopefully, when you're looking at this, you can see that Bitcoin is coming down as well. Total crypto market cap is coming down. We anticipate the futures are coming down also. And don't forget, the futures did quite a rally. Barnes made a great comment in yesterday's video. He said that you don't need to make big percentages to make big percentages. And what we can see, Pepe has a degree of light structural support at that 1397, and it gets a lot stronger around the 1243 area. You also know, because of intercorrelation and interconnection, that Pepe is controlled by Bitcoin Total and the futures. And if you would like the Pepe indicator, just go across to the annual levels on the website. Now, the one thing that we can see with total crypto market cap, if we have follow through here, which is likely probabilistic, we're coming down to the $3.18 trillion structural level across the entire crypto market. This is not a cause for concern. We've been down around this level literally in the past 24 hours. And if you're doing what Barnes is doing, you're just rocking and rolling because you're churning and burning those small percentages, and they really add up, way more than 100x. People from a statistical basis understand how these small numbers add up. There's a lot of stories about exponential growth. Now, when we look at Bitcoin, we're currently favoring that 102,400 level. If we break that, expect 101,440. Now, don't forget, price moves in waves between structural levels. The price charts can move around quite significantly. So for example, when people were down here at 101,440, and don't forget that tail was once a very red candle, they wouldn't anticipate that it could come back to nearly 104,200. But this is the market. Please let me know in the comments, are you borsogging? And what is borsogging? If you're new, a really warm welcome. Borsogging is buy on red, sell on green. So borsogging is here. Buy on red, sell on green. If you would like a chart out of the cheat sheet, please let me know inside the comments. I read all the comments each day. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.